Speak to Ashraf Laidi about this. He's Chief Global Strategist at City Index. I can't help thinking that actually this is a good thing if somebody in the Fed thinks that the economy is growing so well and that actually the impetus is on the upside risk rather than the downside risk. It's a bit of a change and a shift in perception. Do you agree with this or not, Ashraf?
I do agree, Steve, and it's really a case of the Federal Reserve facing the good data. And how many times and how many more appearances by the Fed are we going to see where the Fed is going to try to play down the data? In the last FOMC statement, the Fed could not help but do what you call a gentle upgrade of the U.S. economy. And the markets were able to take that and to push yields higher and to push the dollar higher. And this is very, very important because the word that we have here is that of the twist. The Federal Reserve Operation a Twist is to basically to try to bring up yields on the short end and to bring them down on the long end. If the data is going to improve, we're going to have to see one of those cases, Steve, where the bond market is going to have to force bond yields higher, as it is doing right now, and complicate the job of the Operation a Twist. When this program will expire in June, will the Fed have to further to do more asset purchases and continue to sell or to continue to buy bonds on the long end to try to bring down the yield and to fight the market? Sure. This is going to be quite tough for the Fed to face. But the currency market is still trying to price the dollar higher.
Sure. I mean, the data has pointed towards a recovery in the US so far, but the question is whether that becomes derailed because of higher oil prices, but also this interest rate story. Do you bet against the Fed? Do you think the Fed is going to intervene and try and control interest rates?
Well, we think, the safe answer to that is we will have to wait for the data. We think that the Fed is going to have the semantical armory in its tool, basically to come in and to continue to talk up the economy, but without scaring the bond market by means of saying, look, the economy is getting better, but inflation is still not a threat. They would like to see the bond market react to that by not pushing bond yields so much higher. But if they fail that, and if the bond yields continue to push above, let's say, the 3% level on the 10-year yield, then people will continue to see the new paradigm shift here, which is basically being able to push the dollar higher along with bond yields and along with the third part of the trifecta, which is a rising stock market.
So, Ashraf, is that your core view, that we get higher dollar from here and you then just have to look at the rest of the risk-on, risk-off currencies in terms of how they relate to the greenback?
Yes, but the currency market trying to really buy the strongest versus the weakest. So basically, yes, they would try to push the dollar higher, try to retarget that level around the 125, 124 against the euro. But people, what they're doing most here, with the yen weak, people are going to say, listen, let's try to buy something that has more upside than the dollar, which is the currencies that are more influenced by the U.S., like the Canadian dollar, and trying to push that thing called the Canadian dollar against the likes of the yen.
Ashraf, we've got to leave it there. Thank you so much indeed for joining us today. Very nice to see you. Have a wonderful weekend.
Have a good one.
Ashraf Laidi, Chief Global Strategist at City Index.